Welcome back to The Street on BNN Bloomberg. We are 2 minutes away from jobs numbers in Canada and in the United States. For a preview, here's our expert guest, Don Desjardins, Chief Economist at Deloitte Canada. It's always great to welcome you. Thank you for coming in. As we've told viewers, 20,000 jobs is the call from the survey done by Bloomberg News of a Canadian economist, and an unemployment rate of 5.6%. What are you expecting, Don?
Very much on par with what we're thinking. Slowing in employment growth. We had that strong gain in the previous month, and a lot of wonkiness, it seemed, in that number. But we do think that the labor market is slowing.
How much of a force or a factor is population growth? Oh,
for sure. You know, obviously, if we're going to see growth in employment, but still very modest. Stats Canada has put out numbers saying we need 50,000 jobs a month just to keep up with the growth in the population. So we probably aren't going to get that, so that sees that tick up in the unemployment rate.
And what is slowing the Canadian jobs market to the degree that you expect it to be slowed? Is it rising rates? Is that the key?
Well, that's certainly having a pretty big impact in the consumer side, and of course in housing. So yes, it is very much the high rates.
Ryan, remind us of what you will be looking for in these numbers, which are now 30 seconds away.
Well, we want to see the top line numbers. We want to see if this trend that we've been seeing of slower and slower and slower or fewer job gains continues. I'm sure you always look at the moving average, right? Mm-hmm. Canadian employment, very volatile from month to month. So I always focus on that 3-month moving average, and let's see if it's below that.
What would it take, Don, for these numbers to nudge the Bank of Canada towards a rate increase in October?
Well, I think if we see strong wage growth and strong employment growth, that could be a catalyst for a movement.
Okay, we're seconds away. Those numbers should pop up on the screen at any point they have. It's a huge beat. 63,800 jobs were added to the Canadian economy during the month of September. That is more than triple the amount expected by economists, polled by Bloomberg News. The rate of unemployment does not tick higher to 5.6%. It remains steady at 5.5%. That's the same as the August number. And Don was talking about wages. Wage growth comes in stronger than expected at 5.3% on an annual basis. 5.1% was expected. The wage growth number may be an interesting talking point here. That 5.3% number is more than the August number, and what economists had expected was a step down from August to 5.1% from 5.2%. Instead, we got a step up to 5.3%. Don, what do you think of what you've heard so far?
Well, certainly, as you say, it was triple expectations, but a lot of the movement looks like it was in educational services. And so, you know, last month in August, there was a sharp decline. And now we've seen this recovery. So it could be something to do with seasonal adjustment factors in this particular sector. That's quite an amazingly big move. But we also saw an increase in transportation and warehousing. So, you know, this does suggest that there is some activity happening. But we saw construction declines, and in the finance area, we saw some declines. So overall, you know, we have seen some pretty big movements in this educational sector. And so kind of skews the numbers, I think, a little bit on net. I guess it looks like it's up about 20,000 on.
Okay, I want to, if perhaps we can put up a board of the U.S. futures, because there's a huge beat in the United States as well. 336,000 jobs were added to the, and there they are, there's the reaction. You see the futures contracts have swung decisively negative. They were in positive territory just minutes ago. 336,000 jobs added to the U.S. economy during the month of September. That is approximately double as well, the 170,000 jobs that were expected. Just a second ago, the August number has been revised upward to 227,000 jobs added in August versus the 187,000 that were expected. Ryan, give us your take on this. This is clearly news that the market is not welcoming. The market is clearly betting here that the Fed is being nudged towards a rate increase the next time it comes to market.
I think both central bankers in Canada and U.S. are probably perspiring a bit more right now as we speak in as far as what they're going to do at their next meeting. These are big beats, much bigger than anticipated, the increase of the wage growth. Mm-hmm. I mean, all of this puts more pressure on definitely the Fed, and we'll see what the Bank of Canada does going forward. But I got to assume the markets are quickly repricing a higher probability of a hike.
Dawn, do you agree?
Oh, absolutely. I mean, for the bank, we have, on the other side, we do have slowing economic growth. So, they're going to be really having to weigh those two factors. Employment tends to be a lagging indicator. So if we're seeing the economy really heed to these higher interest rates, it may see the bank just decide to step back and keep these higher interest rates. Whereas with the Fed, certainly they have growth and they have employment growth, so they have a much tougher reason to stay on hold.
Dawn, talk to us more about wage growth here in Canada. Very, very persistently high, 5.3%. Should we think of that in context of the comparison to the 2% inflation target? Is that the right way to think of inflation? Is the right way to think of wage growth?
Yeah, I mean, it is. Some people look at expected inflation. But having said that, we have seen now real wage growth for 5 consecutive quarters. And that is really a mitigating factor for the household sector, because we know that these interest rates are biting mortgage holders, and we're also seeing rents rise so significantly. So that's 2/3 of the population that are facing these really significant increase in their shelter costs. And so now we're getting some offset. What I think it argues for is just a pretty slow growth scenario, not necessarily anything that we see a deep, dark recession on the landscape. That could, of course, change if we start to see a turn in the labor market. But I think at this stage, it just kind of keeps us in balance.
Ryan, how do you think stock market investors are feeling right now?
They're feeling more bearish today. This is what I keep talking about. The most important thing for the markets right now are the rates, right? And every data point that comes in stronger than anticipated, whether it be inflation or job growth, all contributes to, at a minimum, holding rates longer at these higher levels, and maybe even a further hike. So I think prior to the coming in today, I think there was about a 40% probability of a Fed hike in November or December. Again, I got to think we're probably now above 50%. So we got to get these rate hikes to end, I believe, for more of a durable recovery in the economy, and for now a up leg in this bull market. I can't emphasize it enough.
The Canadian dollar, I'm going to give the last question to Dawn here on the Canadian dollar. The Canadian dollar has moved down, not hugely. It's now trading at 72.86 cents US. It was about 72.9 before these numbers, so it's not a big shift. You can see on your screen, Dawn, but the dollar has traded down recently, as we can see. Yeah. What's your outlook, Dawn, on the Canadian dollar?
Well, certainly it seems, at least in our view, that it's more likely the Fed raises than the Bank of Canada. Right. And so to that end, it does exert some pressure. And of course, we've now seen a pivot on the oil price. So again, giving some downward pressure on our currency.